Okay. So why don't we transition now? So that's kind of the transparency on how we do what we do. Now I think it's a good time to kind of make that transition to saying, okay, what is the outlook for 2025? And so as we think about, now we know what we do, what is the market going to look like next year?
Okay, we did prepare for this. So in terms of, yeah, the 2025 equity outlook, we'll be talking about our view, our positive view on the stock market. And that's supported by very strong macro outlook, which Mike has presented earlier. We'll also talk about solid earnings growth that we see across the stock market and the earnings quality improvement, as well as the attractive valuation and therefore a prospect for re-rating of the market. Let's go into each of these points. Because I think Mike did a great job this morning, so I'm not going to stay on this slide for too long, but the summary is that GDP growth 6.5% this year as well as next year, driven by different reasons. This year is going to be by manufacturing recovery, and next year is more because of infrastructure spending and domestic consumption return. But what I want to spend a bit of time on is to applaud the government for having issued a slew of new policies, all aiming at easing the bottlenecks, improving transparency, optimizing supply and demand in various sectors, as well as paving the way for the capital markets to be upgraded to emerging markets. So the pre-funding, the removal of the pre-funding requirements for foreign investors would be effective early November, and we forecast that FTSE will soon consider to upgrade Vietnam to emerging markets.
Talking about the growth outlook, I think in the next 2 years, 2025, 2026, the growth outlook for Vietnam is very solid. And it is supported by losing monetary and fiscal policies that to support the demand and also support the expansion of the business, which will eventually drive growth for the markets. If you look at the past 5-6 years, Vietnam growth momentum is pretty strong, with exception of 2 disruptive years, which is COVID and when we got the bond and real estate crisis. Apart from that reason, we think the momentum will resume this year given the strong macro backdrop that we discussed earlier. Look at the sector level, we see a broad-based growth across the sector. Real estate, we mentioned earlier, gonna be growing exceptionally well this year, but the rest of the markets is also growing very well, growing at about 13 to 25% in that range for this year. Just putting in perspective with other regional countries, we also see growth until 2025 of Vietnam is very strong, actually strongest compared to regional peers.
On earnings quality improvement, because as I mentioned earlier, we're very long-term investors, so when Link presents the picture to us that growth is going to be great this year and next year, we ask the questions of whether that will be sustainable. And we look at the trend of companies' financial performance, and we see that ROE is improving across the market because earnings are improving. But when we look and also it's very impressive versus other Asian markets. It's well ahead of ASEAN peers, and it's right up there with India and Taiwan. When we look at the balance sheet quality, we also see that it's very healthy because although the gearing has slightly increased from the bottom during COVID, which signals that companies are starting to borrow again, which is healthy. We actually see that the current level of gearing is well below the historical level that we saw about 10 years ago. And also, when compared to ASEAN markets, The same ratio in other markets from Malaysia to Thailand and Philippines ranges between 50% to 100%. So in Vietnam, it's at 24%, and it means that companies within Vietnam are very prudent with regards to managing their balance sheet. In terms of the banks, which account for almost 40% of the stock market, the asset quality is improving very markedly. If you look at the red bar, which denotes the NPL, including the legacy NPL that's at VAMC, it's declining very sharply from about 5.1% in 2016 to 1.8% in 2023. And it's declining further by about 10 basis points each year in 24 and 25. So the reserve cover is on a decline, but it's still very good because it's above 100%, which is a prudent level, and also significantly higher than the 60% level that we saw in 2016. So it shows that, you know, on a longer term trend, the companies across the stock markets are seeing asset quality improvement as well as earnings growth returning to the high level, especially the pre-crisis level. So all of that is very encouraging. I'm sorry.
Given the outlook, the growth outlook we discussed earlier, so the question is whether the Vietnam market is attractive or not, it's cheap or not. Compared to historical, 10 years historical, Vietnam's current level is the same, but we have our economy has been transformed, and we are in a much better shape now. But the valuations remained at the low level and well below our average, historical average. If you look at the blue dot, it is indicating our forward PE for 2025 is at 10 times. And historically, 10 years, we only briefly reached that 10 times level once when the COVID happened. So given the valuation level, we think the market has a round for re-rating. If you look at Vietnam compared to other ASEAN countries, we are also trading as a deep discount, about 20%, 25% discount compared to ASEAN's country in terms of valuation.
So, you know, I think it gets to the question, which is, okay, it's cheap. We would suggest maybe it's not cheap for the right reasons. So we saw why the market actually went higher in previous kind of cycles. What do you think will make the market go higher next year or the year after that?
In the past, there was 2 major corrections in the past, and after that, we see the markets rebound pretty strong. We look at historical elements that has helped the markets bounce up, and it's mainly fundamental driven, and it's mainly macroeconomic driven. As we have discussed the whole morning, we see the situation is in a good shape now. Vietnam was some people has the perception that it's a retail-driven market. So the performance of the index sometimes is irrational and not really reflect fundamentals. But we look at different horizons, different angles from the markets, and this chart is actually showing 15 years historical. We compare the VN index and the EPS of the VN index, and we see it's very close correlation between the two. So we still believe that the fundamental story of Vietnam will play in the long run. And we discussed earlier on the macro, on the growth prospects. For us, we're very bullish in terms of growth for Vietnam in the next 1 to 2 years.
Yeah, and you know, it's interesting because what we've heard this morning is a lot of positive sentiment. And obviously, as I look around, you know, we've got people that have flown in from all over the world. Foreigners have been net sellers of Vietnam equities at a pretty wide margin. And so, too, I guess from your perspective, why do you think that is? Is that Vietnam specific? Is it because of opportunities outside of Vietnam? And what has to happen for that trend to change?
Thank you. It's a reality. Sorry. We go to the next one. So foreign sellings, as you mentioned, has been quite dramatic this year, especially in the first 6 months. And by the end of September, it came to 2.6 billion, which is as high as 2021. The reason for the selling this time is more exogenous rather than domestic reasons. And to break down the reason, it's, I think, the Fed rate being the highest in 23 years in the US was the primary reason. And that clearly attracts lots of capital flows out of frontier and emerging markets back to the US for the higher returns at lower risk. Another reason that we observed in more recent months is due to the trend of investing in AI and data center stocks, which Vietnam only has 3.7% of the market in one company, FPT. So we were not a winner in that battle to win capital into AI and data center stocks, clearly. The winners were really the US, Japan, Taiwan, Korea, and so on. And then also, I think maybe one small reason that I cannot leave out is I think some political noise during the first half of the year did contribute to some of the net foreign selling. But we all know that that has settled now, and in terms of political transition in Vietnam has been quite successful. I think the foreigners will come back because also the Fed rate the Fed has started cutting interest rates, and that's going to be that's according to consensus. There are a few more rounds of rate cuts this year and next year that will close the interest rate differential gap, also alleviating the FX pressure on Vietnam dong, and therefore should encourage investors to come back. Last but not least, as Linh mentioned earlier, the growth is great, valuation is cheap. We have the catalyst for a market upgrade by FTSE, and all of that should help drive foreign flows back to the market. According to the timeline we have on this screen, which our analysts, our research team put together based on our discussion with various parties, we think it's realistic that the FTSE Russell would upgrade Vietnam to emerging market by 2026. But I think that the market's fundamentals are so strong that this could just be a cherry on top. It doesn't have to be the main reason, because we definitely have the other reasons going for it as well.
So this is very, very interesting. So I've been with VinaCapital since April of 2020. And historically, the conversation about upgrade has been led, frankly, by asset managers. We would either answer the question or we would prompt the question. And it seems like this year the conversation is actually not being led by asset managers, but by the government. Have you seen that shift, and what do you make of that?
Yes, we've seen that very clearly. The big change is that the SSC, the regulator of the stock market, is driving the process. They are very active, traveling to foreign markets like Hong Kong, Singapore, Australia, Japan, Korea, to meet with investors and explain to them the process and the progress of basically what they are doing in order to help FTSE Russell and MSCI make the decision to upgrade to Vietnam. I think one of the things we discussed, because I went along with a few of these trips in the past, and listening to the regulators themselves speak to investors, we see lots of political will and lots of determination within the government's offices in order to push this through. And Linh just mentioned earlier, and I need to just clarify a bit. When I said 2026 upgrade, I mean the official upgrade. But maybe the market only needs to wait for an announcement, and that should come by 2025, next year.
Interesting. So, everything sounds terrific, and I may be actually getting one slide wrong here, but what are the risks? I mean, not everything is perfect, so there are some things that obviously keep us up at night.
Right. So on the risks of the stock market, we identified that there are a couple of exogenous risks, which I think Mike has discussed earlier as well. It's about the US economic slowdown that has an impact on the exports from Vietnam to the US, And also, by extension, I think the global slowdown might also affect our overall exports. And then China situation. The China's overcapacity also can lead to their dumping of goods in various export markets where Vietnam also competes with China. And that's something we need to watch, especially for export companies. Geopolitical risk was also discussed, and in fact there was a question on it as well, so I would not go too deep into that, but definitely any volatility on that front would cause investors' sentiment to be very fragile, as we've seen in the past with the Ukraine-Russia war, for instance, when it first broke out. In terms of domestic risks, is about the domestic consumption demand, which, a bit surprising to me, has not come back. So that's again something we need to watch. And then the speed of real estate recovery. I think this is, even within VinaCapital, different teams or different people have different views on when that will happen. So that's also a factor to watch closely. And then higher inflation next year, which might be prompted by oil price, may weigh on the government's monetary policy. And last but not least, any delay in the FTSE announcement or official upgrade may disappoint investors, although I don't think it's a big risk.
So thank you. So a bunch of questions have come in on the first session, the second session, so let me just start here. In many of the developed markets, a lot of the money is looking for ESG. Having said that, a lot of those stocks, there aren't that many of them, and so therefore a lot of those stocks are actually overpriced. Do you find that it's the same situation in Vietnam, where stocks that have kind of good sustainability or good ESG practices, are they overbought? Do they have a premium? Are they expensive relative to other companies?
Maybe I'll say something first. As in the case of ACB just now, I mentioned that it's got the best ESG rating, but valuation is actually very undemanding because it's only in line with peers. I think that's one example to show that in Vietnam, that's not the norm yet. It's not the trend yet. In fact, we've observed many mispricing opportunities like that. And by doing very deep research, we can find great companies that trade at either a discount. I mean, if it's a discount, it's a bonus, but if it trades in line with peers, that's also like a strong catalyst for us to consider the stock for our portfolio.
Maybe I can add a little bit into this. In terms of ESG, the corporate governance, we haven't seen much of the premium, but we see the discounts. A lot of the companies which do not disclose properly, or they got corporate governance, they lost trust with investors, and their stock performance affect quite seriously because of that. So I think the companies, more and more companies being aware of that, and they trying to, while we track the numbers of disclosure, how they improving over time, we see there's a big improvement for all of the listed company moving toward improving ESGs in general.
So here's a really interesting question, which is, why, or maybe even how, is EPS growth so high, given that consumer spending is roughly flat?
Okay, so if you look at the makeup of the stock market, about 40% is banks. And we're still seeing that the banks can grow their loan book in this year, next year. Actually, last year was a rather weak year for the whole market, but banks were still the forces driving earnings up. So we're fortunate that in Vietnam, because the banking penetration rate is so low, that the banks can still expand even in the last 1 or 2 years when economic conditions were not the best. But looking forward, when we see that economic recovery is on the horizon, and I think Mike made a very strong case on that, we are very confident that the banks will continue to drive earnings for the market. And as in the chart Link showed earlier, this 2025's earnings for the market will also be driven by the real estate recovery. So the real estate sectors is delivering something like 100% earnings growth, and that's quite realistic because if you walk around in Ho Chi Minh, you can see that actually there are lots of people and not enough of this modern housing. In fact, we are facing a supply shortage situation. So we didn't have enough time to go into the policy change, but in the slide earlier I showed about policy enhancement. There was a mention of the real estate, the land regulations change that was effective on 1st July.
And I think, because I know certain slides that we didn't show, which is, I think, consensus earnings this year in the market are up roughly 11%. Is that about right?
Yes.
And when I look at VVF, and Michael, the PM, will talk about this later on this afternoon, the earnings in there are 24%. And so we're able to build a portfolio with roughly double the earnings than the market. And so if we're buying companies at 24%, but the consensus is 11, it does mean that there are plenty of companies that actually aren't growing at that higher rate. So it's really about identifying the winners, which not everybody is winning equally. So maybe go to the sector earnings.
Yeah. And I can add a little bit in terms of the consumer demand is weak. That is the true picture. But what we look at is the top companies. The companies are listed usually are the strong and the top company. And if you see, last year there was a certain, last year there was certain company that got a low base impact, and it's a big companies like Mobile World, Masan. This year they recover. They are top leading in the markets, and their earnings were like 3-4 times increase from the last year. So it's drive all of the numbers up. While FAT is also growing strong this year.
Yeah, that's a fair point. Another question came in, which is, in relation to stewardship, do we proactively engage with companies that we own, even public companies, to establish a dialogue and improve their ESG practices? And is that really just to change their policies, or is it really about creating more value and enhancing the stock value?
Yeah. We engage with the company a lot. I think we are proud that we are very active. We join almost every meetings that hosted by the company so far. We, as a big fund, we also, when we also hold big positions, we also have a good position to talk with them openly. We give out a lot of engagements. We send out engagement letters, and we track whether they accept it, they meet us, they follow our suggestions over time. So this is an ongoing process. We check if they do have a plan for changing, or if they really implement the plans, not just greenwashing or just saying and they don't do it. And then we score them based on, we have a very detailed system of scoring system to track, and we do see that the companies have, and we do have a very active engagement with the company in general.
And as Ling mentioned, we do visit about 450 companies a year, and in every of this company visit, we'll take the opportunity to convey a few words on ESG improvement to the management teams.
As I said earlier, when I made a comment on climate change or impact of climate, inside of Vietnam, I think people have been surprised at how open and welcoming executives have been to ESG. I think part of it is the younger population, but I think part of it is it's adopting best practices. And so there isn't a politicization of the process. It's not a dirty word. It's really about, if you can help me be more efficient, that's fantastic. All right, great question came in here. As interest rates are relatively low, and again, low for history in Vietnam, can we get a view on the outlook for how long they'll remain at these levels and the effect towards earnings and growth of the portfolio companies?
I think that the Fed rate cycle has a lot of implication on Vietnam because if we recall from history, in 2022, I think we raised interest rates 2 times, each time 100 basis points, just to so-called protect the currency from deep depreciation. So the government has always prioritized the trio of inflation, interest rate, and FX. These are obviously interlinked, But they have seen in past cycles that stability is very important for Vietnam's economy. Because we are dependent on FDI, and FDI investors value the stability of the currency as well as the economic environment within a country. So the government would do everything they can to maintain currency depreciation under 2 or 3%. Inflation, their long-term target has always been under 4% inflation. So I think the Fed rate has all the implication on this. So as long as the Fed rate is being cut according to consensus, then we have very strong reasons to believe that interest rates will stay low in the next 24 months.
And we'll hear, I think that's a question we can maybe even ask again. We have the CEO of a bank coming up later today and our bank analyst, and we'll be talking about that because Lynn and the research team went up and met with the State Bank of Vietnam and some other ministries recently, and so we can kind of have that discussion, which again gave us more confidence. We'll talk about that in the banking panel. Sorry. All right. One more question. Okay, we've got a couple more questions here, but are there any questions from the audience? Because I know I talked to some people that have connectivity issues that couldn't log into Slido. So are there any questions from the audience?
They're hungry.
I know they're hungry. Okay, so we're gonna tell you what we'll do. We'll end there. There's a couple questions we didn't get to. I have the names, so we can get to them. I apologize. All right, so don't everyone leave yet. So lunch is next door, and there should be enough room for almost everybody. And then if you want to stand up and eat, and also, and I want to mention this because he's my boss, Brooke Taylor, who is the group COO, he wrote a wonderful book called Asia, Vietnam's Rising Star. And so after people get their lunch and sit down, we've asked Brooke to share his insights. When people talk about kind of why Vietnam, Brooke has, I think, a very unique approach, and we're very proud to have him share his insights. And so please, everyone, get their lunch and go sit down. And then we've asked Brooke to share his insights from his book. So thank you very much.